Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, the hidden cost of buying a home and the CEO of the world's largest miner on the opportunity in Canada, plus a look ahead to the big issues facing us in 2026. That's all ahead. First, for the week that was in business, it's time for the briefs. The pace of inflation was unchanged in Canada in November, rising 2.2%, but prices for food grew at the fastest pace in almost 2 years, up 4.7%. Coffee and beef are two of the main culprits. Meanwhile, housing costs are also elevated, up 4.7% on a yearly basis. While some categories did see relief, including declines in the prices of some services like travel, it's cold comfort to Canadians who are struggling with affordability.
If you're a family that's already having difficulty putting food on the table, the fact that food price inflation might come down, that's not the same thing as food prices coming down.
The housing market slowed in November with volume of sales down almost 11%, according to the Canadian Real Estate Association. The average sale price dropped 2% from the year before to $682,219. That indicates some sellers may be dropping their prices to close deals. A strong signal from the Bank of Canada that it will hold rates where they are for the time being could act as incentive to buyers and sellers to move now rather than hoping for a change of rates. There were 173,000 properties for sale across Canada at the end of November, which was up 8.5% from the year prior, but still 2.5% before the long-term average for November. The federal government is committing almost $100 million to 4 quantum computing firms in Canada as part of a commitment in the budget to support the sector. The first phase of the Canadian Quantum Champion program is aimed at providing funding to a space that Canada has an early lead in. Quantum computing is still very much in its infancy. The federal government officially approved the merger of Canada's tech resources with the much larger British Anglo American. The combined entity passes the net benefit test, according to the feds. It will be headquartered in Vancouver and has reportedly made commitments to create 4,000 jobs and invest $4.5 billion in Canada. Ford says it will take a $19.5 billion write-down as it kills plans for several electric models, including the fully electric F-150 pickup truck. Ford says it will pivot into gas and hybrid models. EV sales in the U.S. fell more than 40% in November after a consumer tax credit there ended. But even as its overall U.S. sales fell slightly, Ford said sales of hybrid vehicles rose 13% in November, and that in a weak market for electric vehicles, Ford's high-end models priced between $57,000 and $88,000 U.S. were not selling. Cannabis firm Canopy Growth plans to acquire Montreal's MTL Cannabis in a deal valued at $125 million. Separately, cannabis stocks got renewed attention on news that U.S. President Trump is moving to reclassify marijuana as a Schedule III drug. That could bring a flood of new investment into the market there. And those are your business briefs. We talk a lot about housing affordability in Canada. Here's a look at the cost of development charges by the numbers. According to housing regulator CMHC, development charges on new builds are costly but vary wildly, from $39,600 for a 2-bedroom apartment in Ottawa to $121,500 in Markham, Ontario. That represents charges per unit of 8% and 15.7% respectively relative to the price of the condo, and they add up. The average new apartment building in Markham was 246 units. That's an added cost of $29.9 million in development charges alone. The highest charges are in the city of Toronto at $130,000 per unit. The lowest were in Quebec, with Montreal's development fees sitting at about $8,500. Similar charges are levied on single-family homes, representing 8.5% of the price of a Toronto home and 9.4% of the price of a home in Pickering. How the funds are used also varies wildly, but the intention is for housing-related infrastructure, things like road and transit, water and sewage, parks, and school land acquisition. In Toronto, about 50% of the total fees collected are used for roads and public transit, but in Langley, BC, that number's closer to 25%. Meanwhile, Langley spends 45% of its fees on water and sewage, which Toronto dedicates only 10% to. Most of the time, development charges are a combination of regional and municipal government charges, and different municipalities have different responsibilities when it comes to infrastructure. CMHC's conclusion that municipal finance and housing finance are deeply intertwined and that more attention needs to be given to how growth is being funded. Coming up, the CEO of the world's largest mining company on why Canada is a place to invest. Stay with us.